Hello, everyone, and welcome to our webinar. This is actually week 3 of our 3-week series to make sure that we have a good cash flow strategy going forward. So hopefully by now you've had have time to look at the first 2 weeks. If not, they are on demand on our in our course shell. So please take a look. But this is week 3. And really what we're focusing on in this week is our daily cash flow check. So if you remember in our previous weeks, what we said is this week is all about taking 15 minutes every day to make sure that we know where our cash flow is in our business. So we're not going to be doing forecasting. We're not going to be doing budgeting. We're not going to even look at our P&L. We're just going to focus on our cash flow so that we understand what happens with our cash flow every week, ultimately every month, so we can project forward how much cash we think that we're going to have in the future. So again, 3 steps to building the cash flow strategy. Week 1, we took a hard assessment on where we were and what had happened operationally in the last 18 months. So again, not always fun, but not designed to look backward in regret, but just to really understand what was the gap that was filled by all of these government programs, right? If we hadn't had PPP round 1 and 2, and we hadn't had RRF, and we hadn't had ERTC, how much money would I have lost last year? That's really important to know because we need to know where we are right now and if we still have that gap, right? That's really what we're trying to answer there. So if you haven't done so yet, look at that lecture. It's very important because we really need to know, are we break even right now? Maybe we are, maybe we aren't. Week 2 was taking what we learned in week 1 and building a forecast, right? Being realistic. What do we really think the next 4 weeks are going to look like? The next 8 weeks are going to look like, with a focus on cash flow, right? Not about building a 3-page budget analysis. This is cash flow to really say, do I think I'm going to lose money in the next 4 weeks? Do I think I'm going to make money in the next 4 weeks? That's really important to understand so I can understand if I have enough cash right now, or is there free cash that I could be doing other things with, right? Week 3 is building a 15-minute a day, may not even take you 15 minutes, could be 5 minutes a day, peace of mind checklist to really say, how do I make sure that I'm in a good place with cash flow every day without spending 4 hours a day on my accounting, right? Because especially right now with labor shortages and costs going up, you probably don't have 4 hours to spend behind your computer, right? You're probably doing other things, running your business. That's okay. This is a 15-minute a day check that will give you peace of mind and will be incredibly important for all those other things that you're doing in your business. So first, review. Week 1 assignment, if we haven't done it yet. Week 1 assignment was to create a data sheet so we understood where our sales had gone from 2019, 2020, and then 2021. This is important because our forecast should be based on a realistic number, right? We don't want to just build a forecast on 2019 sales numbers. We need to know where we are, how that breaks down to a weekly amount, rolls up into a monthly amount. All that's very important. So that was the homework for week 1. And then you also did the same thing with your cost of goods. What did your cost of goods look like by month from 19, 20, and 21? And what did your labor look like? Very important to make sure that our forecast is accurate. Week 2, we put it all together. We took the percentages that we found from doing the data sheet, right? So we know what our cost of goods are running right now. We know what our labor is running right now. No excuses. We know how much operating expenses we had because we worked through all of week 2 and we have our forecast, right? So now we have, this is a 4-week look. This is not a monthly look. This is a 4-week look at our operations so that we know what we expect in the next 4 weeks. Doesn't matter if the next 4 weeks is the end of the month, the beginning of the month, middle of the month. In the next 4 weeks from today, this is what I expect to happen. So I pretty much think I'm going to break even. The final step of that was saying, if that's my expectation, what does that do with my cash flow? Right? So I started with 60,000. I think period 1, I'm going to lose $1,000. So I should have about 58, almost 59,000 going into the next 4 weeks. And then the next 4 weeks, I expect to be break even. should still have that same 58,000 when I go into the following 4 weeks. In the following 4 weeks, maybe I built in a little bit of, COVID, things slow down a little bit. It's the fall, it's flu season. So maybe my cash goes to 57. Right away, just from this work, I now know that I don't expect to lose a lot of cash, right? I'm not gaining a lot of cash, but if nothing else happens in my business and I just run my operation, I don't expect to lose any cash. But from here, I might say, well, but I have this repair I want to do before the end of the year, or I'm going to hire a new manager. All those other things we would want to build in further, because the goal is the number in green, my cash reserves, right? So if I hire a new manager, what is that going to do to my cash reserves? Because I think I'm going to be break even right now. So maybe I strategically am going to lose a little bit of money. That is where we're going. The final piece is, okay, I have a great cash projection, and I know that, 12 weeks from now, I expect $57,000 in my bank account. So what do I do now, right? Well, now I have to track it. I have to really check to see if my cash is following my forecast, or especially in the first weeks, are there things that I was missing, right? I have the wrong food cost assumption. I have the wrong labor assumption. My operating costs are higher than I think. This is a great forecast, but now we need to make sure that we're staying on track to our cash targets. This is all about cash flow. Okay, so how do I do that? That sounds complicated. It's actually really easy. This seems very simple, but it's actually not so bad, I promise. So what we are going to do is what we call our daily cash flow check. That's all it is. We are going to check your bank balance every day. That sounds elementary, right? But think about it. What we're looking for is the trend. I don't just care what your bank balance is today. I care what it's been over the last 2 weeks. What is the trend? If you're biweekly payroll, there's going to be weeks where it goes down. There's going to be weeks it goes up. What is the trend there? Am I losing money week over week, or am I gaining a little bit of money week over week? Or like my forecast, I'm staying about the same. At the end of the day, even with the ebbs and flows, I'm about $57,000, and that's exactly where I think I'm going to be. This daily check combined with our forecast will let us know we're on the right track, because if we start to track and cash goes down a lot, then we know, okay, we need to do something because we missed something in our forecast or things have changed. We need to go reevaluate. If we're in line with our forecast, then we know things are good, and we have that peace of mind with only needing 15 minutes a day. And it may not even be 15 minutes. Depends on how slow your internet is and how quickly you can get on your bank login, right? That's it. Okay. So what we're going to do is set up our daily cash flow check. So what that looks like, so let me go to my daily cash flow worksheet. So you will see in our course, let me just make sure you can see my screen. What you will see in our course is this Google Sheet. So this is separate from the forecast. So we had our forecast. Now what we're doing is our daily cash flow check. So what we're going to do is first at the top, so you'll see it has the year, the month. So we would want to change that to September. At the top, what we want is the name of all of our cash accounts. So if you have an operating account, a separate payroll account, a separate savings account, we want to list those there. This number right here, I'll make that bold. That number is your total cash that you ended with or started with at the beginning of the month. If you don't know or you're not sure, what you can do is put in the bank balance as of the first and then just have that be the total. But ideally, this would be your bank balance on 8/31 that then carried into September 1st. So here we started with 48,995. When I checked my balance on the first, now remember, this is not P&L. I'm not analyzing operations. I'm just looking for cash flow. So when I do this on 9/1, I had 51,420. What that tells me is on the first, I gained 24,25 in cash flow. Now, maybe that was, an extra deposit, whatever it was, right? That's what I've gained so far. So then I checked it on the Thursday, and it was the same. So now I don't do anything. I keep it the same. On the Friday, it actually went up to 61,200. Now, here, if you note, I have over here that it's a payroll week. Well, that may be because on Friday is when my payroll hits. So see how the Friday I started the day with 12,000, but then by Saturday I only have 3,000. That's my payroll, right? I don't have to do anything, but I know that makes sense, right? But I'm still at 52,000. And then on Sunday, I'm at 50,000. But again, weekends, it may end up just being the same. And then we'll say on Monday, it's 5,500, and then I transferred money into my savings account as well. So here we go, right? So that would tell me that I'm up 11,500. Maybe I transferred money over to my payroll account, my savings account, but this is my operating cash. If I don't have those, then that goes away. So really what this column is doing, just to understand it, is this column is saying the total cash I have in all of my bank accounts. Because what also gets hard with when we look at just the bank balance per each account is you might have transferred money, right? You transfer money into a payroll account. So your operating account goes down, but your total cash didn't go down, right? Because you just moved the money into the payroll account. But then when the payroll is taken out and the payroll account goes down, now your total cash went down. So it's sometimes hard with multiple accounts. This will help because all we care about is our total cash, however it is divided among our different accounts. So what this tells me is as of 9/6, I have 50,500 in my bank account. My operating cash has gone up by 1,500 since the start of the month. Now, a few things to keep in mind as you're doing this for the first 30 days is your cash may go up and up and up, and then you pay sales tax at the end of the month, right? So then the sales tax comes out and now we're back to break even. We're not going to dig into any of this. This exercise is just cash flow. We are looking for the trends. How much does your cash fluctuate throughout the month? Is it on a steady increase? Is it break even? Did you lose money? So if you look at the full month, this would be a full month here. So we started with 42. Here's our operating month cash. And then at the end of the month, this is how much cash we have accumulated over the course of the month. So that would be really important. So if this was, the previous month, now when I get to this, my next month, I could say, well, okay, I went up by 6,000 last month. I think that may be a good target for this month. So it's really getting us to focus on the cash in the bank. I promise you, if we do this for 30 days, it is eye-opening because it really takes the uncertainty out of it, right? That you know that you are cash flow positive, which is so important as we move forward. So, okay, so let's go back to our slides. So again, daily cash flow check. I'm going to give you the link at the bottom in our course shell, but really what we're doing here is we are setting up our daily cash balance from all of our accounts. 5 minutes at the most, 10 minutes maybe if your internet's a little slow. Shouldn't take us long. And that's all we do, right? It's okay. We check it every day. If you miss a day, no problem. When you get there the next day, put in the previous days. You're going to want to see every day because that's also the fluctuation. Step 2, look at what it says for operating cash, but then also keep in mind of things that that haven't hit our account yet. Maybe you wrote a bunch of checks last week, they haven't all cashed. Maybe your sales tax always comes out on the 19th month and it's the 18th, right? There's always going to be things that but having that current month operating cash will help us to make sense of it, right? I'm up 11,000, but I haven't paid sales tax yet. So I'm probably really up about 3,000 and the rest is just sales tax I've collected. The third step is then really getting comfortable with our total cash. So operating cash is important because that's what we're earning in our business. Again, that may be what we pay ourselves. You may set the rule that I want to make sure that my business is making $4,000 every month before I take a distribution of $4,000, right? And then I'm going to leave the cash about the same. But what we also want to look at is total cash in the bank. Do we have enough? What would we set for a parameter for how much cash I should have in my business? So what we would look at there is something that makes you feel comfortable. Maybe I always want to have 3 payrolls and my payroll is 20,000. So 60,000 is my minimum. Things like that. As we do this exercise more and you get more data, that conversation is going to come very naturally to you because you're going to see the times of the month that goes down and then it comes back again. And I think it will build your comfort level with how much cash you need on a daily, weekly, and ultimately monthly basis. Okay, so what can my cash flow tell me about my business? Because again, this isn't everything, right? This isn't going to tell me my food costs or my labor costs, right? The operating information that I get out of P&L, not here, but there is some very good information on the sheet that is used in addition to those operating performance measures that we do, right? Because again, this is our toolkit. This is one of the tools that we want to have for, oh my God, COVID's coming back. I know my cash balance, I know what I need, and I know about how much I'm making right now, so I can adjust, right? That's all this is about, is to get us tools so we can make those adjustments really fast if we have to. So what this tells me is on August 5th, I had $60,000 cash in my business, and I've made about $11,000 in current month operating cash. But I also know that my 4-week period had me ending at $69,000 with a cash flow about $2,400 a week. So what I know right away is, at least for the first week of August, I have more cash than I expected, which probably tells me it was like a weekend of sales. I collected more tips. There was a special event. Sales tax hasn't been filed. There's some other things going on, right? What I don't want to do, and what most of us did prior to COVID, would be distribute 11,000 and call it a day, right? Well, I have all this cash, let me take it out. And then all of a sudden the sales tax is due, the tips have to be paid, and now we're in a cash crunch, right? If cash goes up, we want to know why, to make sure that it is our cash and not cash that we owe somebody else. So key questions: did my cash flow go up last week? Is my cash flow positive? Why? And if not, why, right? Very important there. And again, this may be the springboard to going back to doing the operating side too, to find some of the holes that may be there. And then, what is the minimum cash that I would like to have in my business going forward? What is my no-go, I am not spending anymore level, where this is the cash that I will always have in my bank account so I don't have to worry about payroll again? We want to know that number, because that becomes our new minimum, right? If it's 60,000, then it's almost like pretending 60,000 is zero, because we never want it to go below 60,000, and maybe we have a little buffer so we're not right at 60,000. That's a really important thing to get used to seeing, because pre-COVID we would have said 60,000 in my bank account, I'm doing so well, I'm going to go buy something, right? And then all of a sudden we have 3 slow pay cycles and we're out of cash. So we want to have that minimum balance that we never touch, so we know that we are in a good place. Okay, so how do we have a better understanding of our cash flow? Do this exercise for 30 days. I promise you, it will be eye-opening to see how things fluctuate and your true cash flow at the end of the month. So if we did this for 30 days, like we saw on the worksheet, that would mean at the end, all the way at the bottom, the 6424, that is my operating cash flow. Now, my P&L might show something different, and we're going to get to that in a second. But in the cash flow, 6424 is what I have, right? That is what I have earned in this last month. So that is a very important number to really start watching every month, to see what I trend in terms of additional cash every month after everything else is said and done, right? Including owner stuff. So the next part is, obviously 6424, it's going to be different than my P&L. We know that there are things that are not included in your P&L that impact your cash. But what we want to understand is, for your business, what are some of those things? So non-operating events that can impact your cash would be, maybe you make quarterly tax payments, either for your payroll or your ownership or your company itself, right? So either way, there could be quarterly tax payments that come out that really aren't on the radar, because it doesn't happen every month, but it does happen every quarter. The next thing would be your fixed monthly payment for your debt. That's not included on your P&L, but definitely comes out of your cash flow. So things like, equipment leases, car payments, debt loans that you took out for build outs, things like that. All of those are your debt payments that are really not going to be included in your P&L. Now, you may have included them on your forecast, which would be good. If that's the case, then we still should be in line with our cash expectation because we did assume that we had made those debt payments. But what about paying down outstanding debt? What about I included my monthly payment, but I also decided to pay $25,000 extra, or decided to pay some debt down? That would be my cash going down, but definitely not going to be in my P&L and not part of my operating, but maybe it was part of my cash flow plan, right? I realized I have 80,000, my minimum is 60. I'm going to go pay down some debt. So that would be something that impacts our cash, not part of our operating expenses or part of our P&L. So again, if I started the month with 45,000, my forecast says I should have 5,500 extra at the end of the month. My expected cash balance would then be 50,500, but I find out that my actual cash balance is actually only 41,600. But I realized the difference is I paid more down on an outstanding balance for, say, a credit card or an outstanding loan balance. So I might say, well, that was still part of my plan, and that's fine. If it was a credit card payment that, say, I always pay in full, there may just have been some timing. So again, doing this 1 month may not give us all the answers. Doing this every month will definitely give us answers, because there's so many reasons why our cash would be different than our P&L. But the more we do this, the more we understand those differences, right? The other reason it could be lower is the weekend hit in 3 days, right? The first weekend of September, and you're much busier on weekends than you are during the week. So there's lots of reasons. But at the end of the day, the more we do this, the more we're going to understand when our cash flow changes and why. So why do trends matter? Again, we would want to also go back and make sure that we are hitting our forecast target, right? Is my difference an operating thing? My sales were lower, so my forecast was wrong, or my sales were right, my forecast was right, but I did something else that's outside of my P&L. So we'd want to check that. And then also we'll want to go back and revisit our forecast to make sure that our spending is in line with the percentages that we created, right? So we would definitely want to do that every period at a minimum every month, just to make sure that we're still in line. But the more we know about any gaps we see between our forecast and our actual balance, the more we'll understand if it's an operating issue or just sort of a one-off thing that we've paid for something that really isn't operational, but something that we had to pay. Okay, so what to do next? We really want to make this daily cash flow check, part of your daily routine. I promise you, in 30 days, you will have such a peace of mind over your cash. Not always great, but even when it's not great, you will know why right away, right? If you're checking it every day, then you know what's happening every day. Not just even from a forecast standpoint, but even a control, right? Because if your cash goes down for 3 days, maybe your restaurant forgot to make the nightly deposit, forgot to take the cash to the bank. Maybe there was something that didn't come through, right? Maybe an event got canceled and you had to refund the deposit. All of those things. If you check it every day, you will know exactly what is going on in your business, which will enable you to hold your team accountable and have a record of all of your cash balances, so that every week, every 4 weeks, we can go back to our forecast and tweak it, right? It's not a one and done. We're going to go back every period and just check it, but we really need to do all of these other things first. So remember, the daily cash check does not replace the weekly trend sheet. The two go hand in hand, because if I'm checking out my weekly trends and I notice that I'm, 11 points higher on food costs, then obviously my cash flow expectation of 5,500 is probably incorrect, right? My costs are clearly going up. So I really want to go back and adjust that so I have a good cash target. But if I see that I'm right in line with my targets for COGS and labor, then chances are my forecasted cash is probably pretty close to where I'm going to end up. So the weekly trend goes hand in hand with the daily cash check. So I rounded out 15 minutes a day. That's not bad for peace of mind over your cash flow and your business. Okay, so homework assignment for tonight or for this week is build out your daily cash flow check. You're going to see the link in the course shell. build it out on yourself. I promise at first you're going to think, this is so silly, but give it a week and you will not find it silly. You will find yourself updating it every day. Then after that, if you can, go back 30 days, right? Why wait 30 days? If you're online, go back, even if you do once a week for the last 30 days, because that will give you a starting point where you were 30 days ago versus where you are today. It's great information to have right away versus having to wait a month for your daily cash flow check to catch up. And then from that exercise, if you're able to go back 30 days, what did we learn about our cash flow? Are we cash flow positive? And if we're not, can we kind of figure out why? Or are there some bigger things that we really want to take a look at to make sure that there aren't, some hidden issues in our model that just are struggling right now with rising prices? Because we know things are going up. We know we probably aren't making what we were making 2 years ago. So if that's the case, why? We need to find it and really know what is a realistic cash flow for this business today so that we can change it going forward. So I hope this helps. Again, if this is a lot and you don't have time or you feel completely lost, please feel free to book a time on my calendar. We can go through this together. If you are a Largo client, it is free. It's a resource for you. We will build this all for you, give you the tools, check in on you, make sure that you are doing it right. And we have good information coming out so that we can build the strategy together. If you are not, offer is still there. There's a fee, but it's definitely worth it to build these tools now so you can really get in the habit of checking them and give yourself peace of mind as we get into next year for truly where your business is and where your cash flow is. I promise you, it is not a wasted time. It is so important to make sure that we never again have anything like 2020, that we are fully prepared for whatever uncertainty happens, because it's business. There's always going to be uncertainty, right? We know that. We know what it feels like to be entrepreneurs. What we want to do is build a toolkit so we have no surprises. We are prepared for whatever the day brings, and that's the life of an entrepreneur, which we love, right? But it's always good to have some tools as well. So thank you for taking the time to be a part of this course. If you do have any questions, please feel free to reach out to our website or my email. I promise you, we are here to help and we are happy to do it. So please reach out as you work through these homework assignments and work on building your cash flow plan. Thank you very much, and we will see you guys soon.